Hey everybody, it's Raj here, your favorite realtor. I'm here joined by my good friend and a professional mortgage broker, Jayant Behel. Hey, Jayant.
Hey everyone, good to see you guys here.
It's been a few months now since Jayant joined me last to give an update on the mortgage market. So we're going to talk a few things mortgage, a few things financing, and we'll actually ask him about 10 quickfire questions to get his feedback or update on the current mortgage climate. So before we start this quick session with the mortgage questions with you, right? Anything you want to share about the overall mortgage market right now?
Everyone has been following the Bank of Canada updates like a hawk. Interest rates are coming down, mostly because the economy isn't doing very well. That doesn't mean you should do your own assessment because the interest rates can vary. You get a mortgage for 25, 30 years.
Yeah.
And you will have periods where the interest rates are low, the interest rates are high.
Yeah.
So be prepared to ride the wave. Do your affordability assessment before going and shopping around for rates because that is way more important than what the market is offering right now.
Perfect. Okay, so let's dive right into it. We'll ask the questions we need to ask and get his answers. So at least you guys get some value out of this. And if you have any questions about mortgages, you can always talk to Jen. I'll share his contact info in the comments and in the video as well later on. So Jen, interest rates are trending down. What's the smartest move the buyers can make right now?
Do an affordability assessment. The interest rates can come down all the way, but if you end up buying something that you can't afford, you're going to regret it later. So do your assessment first. Your eligibility is different from your affordability.
Yeah.
So it's more of a personal thing than looking outside in the market at what's happening.
Perfect. All right, second question. There's been a lot of rule changes over the last year, even this year. How have those mortgage change rules affected the first-time home buyers?
I think the biggest change that has impacted the first-time home buyers is the extended amortization on insured mortgages. This rule came into effect from December 15th of last year, 2024.
Yep.
And I see most of my first-time home buyers clients opting for a 30-year amortization mortgage now when they're doing less than 20% down.
So that's to lower the monthly payments, I guess,
That's
right?
to lower the monthly payments, exactly.
Perfect. All right. Next question. Now, this home is beautiful. I'll give you that. I'll show you guys that later on too. But if someone loves this home, but they haven't been pre-approved yet, what's the first step?
Reach out to a mortgage broker.
To you?
Yeah, reach out to me. Reach out to anyone you trust. Run the numbers.
Yeah.
And then come and make an offer on this home.
Perfect. Next one. So fixed or variable, what are most buyers choosing this fall and why?
Yeah, another interesting question, which I feel you should look inside more than outside before making a decision. Variable is trending down. There is a possibility of you saving in when you lock in a variable rate.
Yeah.
But at the same time, you get a mortgage for 5 years. So if it is expected to come down for the next 1 year or so, there's a possibility that it may start going up after 1 year. No one knows.
Okay.
We expect the rates to come down, but then again, it's a roller coaster ride. They can go up back again, as everyone found out in 2022.
Of course, anytime that could happen, right?
But to answer your question, I would say till about 2 months back, 50% of my clients were opting for variable and 50% for fixed.
Yeah.
People have made the move from fixed to variable now. Almost 70% of my clients are opting for variable.
So variable is the most
fixed.
popular option right now.
Right now, yes.
Perfect. All right. Now, there's been a lot of rate cuts since the highs of last year to this year.
Mm-hmm.
How have the monthly payments changed, say from last year's summer to this year now? We're almost in winter.
Oh yeah, another great question. Interest rates have come down both for fixed and variable by over a percentage point since last year.
Okay.
Which means for this particular house, your mortgage payment could be almost $750 lower
Wow.
than what it would have been last year.
That's big savings.
That's big savings, but at the same time, if you were able to afford it last year, your monthly budget's easing up a bit.
You can suddenly afford it this year.
You can, but you should never go over your budget.
Perfect. So we are here in Mount Albert. Again, I said this is about 20 minutes north of GTA. Are the lenders treating suburban areas or GTA North areas differently?
Not really. This is not too far from the core GTA.
Yeah.
But if you were further up, let's say in Sudbury,
Yeah.
some lenders may look at it differently.
Perfect. Good. Next question. So for families moving from a smaller home to a larger home where they still need to sell their current home, how do we handle bridge financing?
Bridge financing is fairly common actually. Most lenders have the option to offer bridge financing, and it totally depends on what's the time frame between you selling the house, closing that one, and moving into the new house.
Okay.
Your bridge financing is fairly open. If we go to the same lender for both both homes, it's easily handled.
So it's not that difficult.
It's not
something
difficult
that's
at all.
pretty
It's-
typical of these scenarios.
Exactly. It's very, very common for people to opt for bridge financing when they're selling before closing on their new home.
Perfect. Okay. Question number 8. We keep on hearing about mortgage stress test. What does that mean to the buyers today?
Well, stress test is just to make sure that you don't overborrow, don't push your affordability limits.
Okay.
That's what the banks want to understand, that if they're lending you, let's say $1 million,
Yep.
would you be in a good shape to return it back over the next 25, 30
Especially if
years?
the rates move up and your payment goes
Especially
up.
if the rates move up.
And what's the
Exactly.
criteria for that right now? Like, how's this difference between the rates that you choose to?
So as per the mortgage rules, mortgage eligibility rules, you are qualified at R plus 2%. So for example, if your variable rate today is, I don't know, let's say 3.75%,
Yeah.
you are qualified at R plus 2, which is 5.75%. Your mortgage qualification amount is calculated at 5.75%, just to make sure if the rates move up by, let's say, 2%, you are still able to afford
For
this
that
home.
property and make the payments on time.
Correct.
Perfect. All right. So say if you're already a homeowner, you already have a mortgage. How can you take advantage of the new lower rates?
If you're on fixed rates, you might have to refinance your current mortgage, which means you break your existing mortgage and move to a lower rate.
Okay.
This can also mean penalties for you.
Of course.
So reach out to a mortgage agent who can do the maths for you. Make sure you understand, what your penalties are going to be, because a lower rate doesn't always mean savings for you, because you have to break your current mortgage.
Yeah.
And if you are with a big bank, their penalties could be pretty high.
Yeah, so what you're saying is that it doesn't make sense if your penalties are going to be higher versus the savings you're going to get over 5 years, right?
You need to do the cost benefit analysis.
Perfect, that makes sense. All right, so how can buyers lock in a rate even before they start shopping for a home?
Reach out to a mortgage agent.
Okay, that's the best way to do it, right? Reach out to Jayant over here, man.
Yeah, get pre-approved, get pre-qualified. You'll get a better understanding of what you are in for.
All right. So this next question is quite important actually, because a lot of my clients are dealing with this right now. So for people that are waiting for the perfect interest rate, what do you say to them?
There's no perfect time.
There's no such thing, right?
You have to. It brings me back to my first point. You have to do your own assessment. Like I said, you are buying a home for 30 years, 25 years. The interest rates are going to go up. Their interest rates are going to go down.
Yeah.
It's a long journey. You need to be prepared to handle it throughout these 25 years.
Of course.
So there's no perfect time.
Yeah.
The only perfect time is when you are ready, when you feel you can afford a mortgage payment, when you feel you are ready for home
And you
ownership,
can pass the stress test.
and you can pass the stress test.
Of course, that's the point, right? So actually, guys, I think that's all the questions I had for Jen today. I think that brought good value and a good update. Actually, what's the current prime rate right now for most banks?
Yeah, so we had Bank of Canada drop their prime, the BOC overnight lending rate by 25 basis points just a few weeks back.
Yeah.
Now, prime rate with most lenders in Canada is 4.45. So if you're opting for a variable mortgage, most lenders would give you a discount over this 4.45%.
But I think TD Bank is a bit higher, right? They are 4.6.
Yes. So for most banks, it is 4.45. For TD, for one particular product, it is 4.6.
4.6. Perfect. All right. So now if anybody needs even more advice on either qualifying for a mortgage as a first-time home buyer or trying to renew their mortgage that they already have, but just to go over the financials, can they book a call with you?
Absolutely.
Is there any cost for that?
No cost at all.
Okay. And how do they contact you? What's the best way to reach out to you?
Reach out to me on Instagram, reach out to me on my phone. My number is 647-675-3220. And I'm sure Raj will share the contact details with you guys anyways.
And if you guys cannot remember the number, just reach out to me and I'll get you connected with this man over here. He's been my go-to mortgage broker for the last, I would say, about a year. This guy's a fantastic guy, done a lot of great work with my clients and even his own clients. And I'm sure he'll take care of you guys. But anyways, guys, that's enough of the mortgage talk. Thank you so much for sharing those details.
Thank you for bringing me to the open house.
Anytime. You can come every single Saturday and Sunday. I'm always here.